All right. Welcome back, everyone. Let me share with you my screen. All right. All right. Let me see. All right. Good morning, good afternoon, good evening, everyone. Welcome back. Can you do me a favor? Can you just write into the chat telling me where you are from to make sure that you can hear me and see me clearly? Well, okay, wow. Vietnam, Mexico, Malaysia, Singapore, Portugal, Bangladesh, yep, Germany, Thailand, Hong Kong, Lithuania, Bulgaria, Australia, Philippines, UK, lots of people from UK, Australia, Las Vegas, USA, Florida, Malaysia, Los Angeles, Houston, Bahamas. Love you all. All right. Thank you. Thank you so much, everyone. I am so excited to go hunting with you today. All right. Can't wait to share with you the real life trades that I'm going to do today. And I think we will do a lot of live trades today. Let's see how far we can go, right? So let me share with you my PowerPoint, a few slides before I get into the trades itself. Let me see. Here we go. Yeah. So before I start, right, as usual, this is the disclaimer. So I'm going to do a lot of trades today. It doesn't mean that it's a trade call or trade alert or recommendation or advice because I'm not licensed to do so. Okay. I just show you what I'm doing pretty much on a daily basis. And then if you like it, you can practice it in your own platform using paper accounts or simulation accounts. And if you want to do with the real money, it's okay to do with a small positions to start with, right? You need to be trained properly before you really can take the real trades. Otherwise, you could lose money. And just let you know, because I am a experienced trader. So as I said, I've been in the option trading world for 18 years now. So it is now my passion and almost like full-time job right now because I already retired from my recent corporate job. All right. So I plan to do all the thing today within 2.5 hours max. Okay. 2.5 hour tops. Okay. Target 2 hours. Because I tell you, within 2 hours, we can do a lot of trades, right? As long as we know how to analyze it. And then today we only use one strategy, by the way, the one that I share with you on Sunday. So that's simpler than, if you have like 20 different strategies, then you need to think, okay, with this setup, what strategy I need to use. But I assume that many of you has not even learned on those things. So only based on the one strategy that I introduced on last Sunday, we will use it to go hunting, right? I hope you have enjoyed the session with Ed Olson yesterday when you see him talking about, using the price action manipulation techniques and strategies to do some trades live yesterday. Let me go into the agenda. Before I get into the real trade, right? Some of you asked me already, hey, show me my daily routine, my daily trading routines, what I'm going to do before the market opens, after the market opens, and the day after, right? So I will spend like 10 minutes to go through the daily routine, and together with that, some market observation because the market have just opened. So I don't trade within the first 30 minutes after the market opens, right? That is just my preference and based on my experience as well. A lot of amateur traders jump into the first 30 minutes to trade. But I tell you, professional, most of them start to trade only after 30 minutes, right? And I want to also observe the first 30 minutes to see some of the market dynamics, which I will show in the next slides, right? So I will spend about 10 minutes to go through routine and also observation. And also I will spend another 10 minutes max to recap on the key points on the crouching bull strategy, right? This is by far my most profitable strategy until now. So I'm very proud to have created it and make money out of it, survive it during the bear market, and now thriving during the bull market. So really powerful strategy, and I like to use it on many of my trades, all right? And then importantly, we will use the majority of the time today to do the real live trade together, from screening the trade to analyzing the trade and executing the trades. I have a few trades in mind. I already share with you my top 3 AI stocks candidate for the CBS trades that I say, let's go through it today and see if any of them is valid, and then I can enter with my real account as well. But beyond that, I have a few others. And more importantly, I will look forward to receiving trade ideas from you. So type into the Q&A your trade ideas and also your questions. Towards the end of the session, I will answer as many questions as possible and also analyze some of the trade ideas that you're going to send in. All right, it's good, everyone? Please use the Q&A tab in the Zoom chat. And yeah, so that's the last part for today. So try to wrap up before the midnight because I do have other commitment to do after the midnight, which I go through now. All right, so first of all, my daily trading routine, right? So before the market opening, normally what I would do, I mean, this is during the daytime in Singapore, before the market opens, I have many hours before that, right? So I would typically go through my watch list. Yeah, my watch list has hundreds of stocks for my watching, including top one from Adam. He has a UIP stock with his Ultimate Investor Playbook. So I have goods of, a list of good stocks that also included in my watch list. And I have other stuff that I also putting into my radar screen as well. So I use my daytime here before the market opens to go through those stocks, technical chart to see any of those candidates can be a good setup for any particular trade so that I can examine and then potentially enter the trade during the market opening, right? So after that, I will spot the candidates, right? So I forgot to open the other account. So I'm going to use one Thinkorswim account to do all the trade analysis today and also use that to enter the new trade, right? But I have another Thinkorswim account as well where I already put a bunch of potential trades right there. I can maybe later open that account and show you. I have a list of other potential trades, not necessarily the CBS trade, but other trades using other strategy as well. That's normally I do. And I simulate the trade, see if it's a good trade to potentially enter during the market opening. And then after that, I spend some time reading headlines and news. I do not read a lot of news. I do not. I just subscribe to a few of the website when they push into my inbox. For example, this is one. Let me show you one. Which I just received. I subscribe to, this is from the street, right? They send me 5 things you need to know before the market opens. That's it. I read these 5 things. Normally, this is a top 5. And I have an idea of those are the key events that are going to happen in today's session. Or any of those would have some impact to my open trades. And hence, I could potentially need to take some actions, right? Or you can also subscribe to the insider.com. There's 10 things you need to know before the market, the opening bell. The same thing. So they send you a list of 10 things that you need to watch before the opening bell. So same thing, one of the 2 is fine. So that's it. That's all I read, right? I do not read a lot of like CNBC. During the weekend, yes, I could have more time. Then I will read on those CNBC analysis and and more in-depth analysis. So basically, but on the daily, I think I just read this top headlines, and I think that's would be enough. All right, just give me a second. There's some message coming up here. I don't know, is it some urgent? All right, no, it's fine. That's good. I'm good. All right. All right. So now, so that go back to the point here. So read headlines, news, very brief, maybe like 20 minutes or 15 minutes. I've done all the readings, right? Or even like 10 minutes would be enough. And that is before the market opening. Now, when the market opens, I told you the first 30 minutes, I just watch. I do not take actions. I just watch. I observe the market. How is it moving? The price movement across the markets, meaning from the equity market to forex market to oil, commodity, natural gas, to treasury bonds kind of thing, gold. So those kinds of things I watch across, which I will kind of show you later, right? Also have some sense of the market direction and the market sentiment. Today, the sentiment is good. I mean, sentiment is like momentum. Is that strong or is that weak? There's a lot of selling forces or a lot of deep buying forces coming, depends on what day, right? And the market behavior, is that like steady, like the past few days, the market could open down, but then during the day, it's steadily grind higher. So behavior has been like that for many sessions right now. Right? The market has been very strong and very strong momentum. There will be some days when you see a massive rotation from tech sectors to industrials to financials to other defensive stock, right? But a lot of days you see that, hey, the buying just on the magnificent, I keep misspelling those magnificent seven. So the top 7 mega tech stocks that people has been buying and pushing price higher across the years. So I just have the observation for the 30 minutes to have a sense of, is that a good day to enter a bullish trade, or if the momentum is so weak, there's a lot of selling forces, then maybe I think about some of the hedging trade or bearish trade, right? So let's do that step now, as the market has opened already, and we are still within 30 minutes since the opening. My Thinkorswim platform is now on the screen, but you don't see it moving because there's apparently some very bad lagging going on Thinkorswim. Maybe I need to close it and reopen it, but right now you don't see it moving at all, right? But maybe we give it like 30 seconds or so to see how it goes, right? So as of now, you see the market has been up again. It's been like up for 3 or 4 days now in a row. And pretty much SPX is up 20 points. NDX a little bit lagging, but it's okay, but still up. And then Dow Jones is also very strong. You know that yesterday Dow Jones set the new 52-week high. We know that SPX, which is S&P 500, and NDX, which is Nasdaq 100, has been setting new 52 weeks highs in many days in a row. But Dow Jones Industrial has been lagging. But yesterday Dow Jones has broken. Yesterday it broken out and it set the new 52-week highs. So apparently Dow Jones is now playing catch up with SPX and also NDX. I just checked the Russell 2000. So the IWM is a ETF for it. It's still lagging. It's still not setting new 52-week high. I mean, you know, the IWM is an ETF for the Russell 2000 here. It has so many mid and small cap stocks inside, and then it heavily affected by the regional bank, and some of the small banks went under. So that's why it had been lagging, but overall the market has been performing very well. right? So today, the equity looks very strong across four key indexes: S&P 500, NASDAQ, Dow Jones, and Russell 2000. They are on up, right? VIX is kind of unchanged. And VIX is have retraced to about 13 level, which is low. Uh, it kind of pre-COVID-19 level, right? Pre-COVID-19, it has been in that level at that level for many years. 13, 12, even sometimes it dropped to 9. I think 9 is the lowest, right? Between 9 and 13, it had been in that narrow range for many years. And then suddenly COVID make it spike to even like 84. And then the year after that, it retraced down to about 30 to 40 level. And then it keep dropping. And now it's down back to 13 level. So 13 is like pre-COVID level. So that means the market be getting a little bit more complacent, right? That the bull market is back and market trend is very bullish. Everything should be up from here. That's why VIX is low, because people are not rushing to buy insurance. So they're not pushing the premium up. That's why VIX is low. VIX is can be called like fear index. People are not fearful right now. Yeah. So gold is flat today. Oil is up. So oil has been up 2 days in a row, very strongly, and that's why over the past few days you see oil related stocks like Chevron, ExxonMobil, like Schlumberger, Halliburton, on those kinds of oil stock have been very strong over the past few days. But I think Saudi increases the price or their selling price for oil. So that's why it boosts some of the sentiment there on the commodity. Gold has been I think gold has been on a downtrend, if I remember correct. Short-term downtrend, but long-term is still uptrend. Yeah, it has recovered over the past few weeks or so. I mean, it's very lacking here. Yeah, so over the past 2 weeks or so, it has recovered, but it was like on the downtrend for a few months, right? Euro is quite a flat. Aussie dollar also flat. I mean, it's very lacking. Now, Treasury bond has been recovering quite well over the past few sessions. Let me open the TLT, which is the Treasury bond. 20 years Treasury bond or longer. This is an ETF for it, and it has been trading in a very narrow range between 99 and 109, right? So right now it's still at the low level of that range. Just give me a second. The platform is so lagging. Yeah. Okay, hopefully it comes up. Yeah. No, this is VIX. How about TLT? So lacking. Maybe I need to restart the platform or something. Okay, let me close this one and then let me restart the Thinkorswim platform. Hopefully it gets faster. Yeah, in the meantime, I can go to the other points. Okay, give me 1 minute. All right, so right now it's still within 30 minutes after the market opening. So I'm still in the observation mode, watching the market movement, and then see the behavior, the sentiment. And then next step, I will check the performance of my open trades across 5 accounts. I told you, right? I have 5 accounts. And the only way for me to check on the trade performance is to put all together into one Excel file when I track on the accounts and on the trades. Otherwise, I won't be able to jump around different accounts to review the trade performance, right? So let me open the thing on stream again. But it's opening up. So I will check the market still there. Earlier it was stronger, like 20 points, now down to about 16, 17 points. Still okay, hanging around. Push up a little bit, now retracing a little bit. Still up, but not as strong as earlier. Now look at some of the big mega cap stock, right? Microsoft yesterday was up very strongly because they announced the new, they charge like $30 extra for every subscription for their office so that they can, I mean, the user can use the AI features. So that will be a significant revenue and also profit potential stream for them. That's why stock was up very strongly yesterday. I think $13 or $14, and today it's kind of retracing a little bit, but it's still at, I think at near the 52-week high. Yeah, and somebody say yesterday it pushed up even like to on-time high as well. So very strong momentum. Every time they open their mouth and talk something about, you know, AI, then the stock price will immediately flies, right? Google recovery a little bit over the past few days has been retracing about like $1 a day, which is very nice because I want the stock price to go lower. So that because I'm planning to enter one trade on Google, it's up slightly today. Tesla, we have earning today, so let's see how it goes, but has been strong. And Netflix also will have earning after this close, and the price also push up very strongly. NVIDIA yesterday was up because the AI theme back to headline, but now it's retracing. Interestingly, Johnson & Johnson announced some kind of mixed result earning. They released the earnings, and the stock price at the opening, it was, I mean, that pre-market, it dropped like $5 from 159 to 155. So like $4-5. And now it is opening up, which is, you know, sometimes you trade pre-market, right? Because the volume is very low. People can easily manipulate the price. But just wait for the market opens and stabilize and then start trading. I normally start trading after 10 p.m. Singapore time, so 10 a.m. Eastern time. So still not there yet, 6 minutes to go. So that's why I'm not hurrying in any actions here. So overall, market is fine, hanging in there. Like yesterday, like the day before yesterday, it has been up like $20, 20 points a day, which is good. Yesterday, I think up like 30 something, very strongly. Yeah, I was expecting some retracement, some healthy retracement, but it has not happened yet. So let's see how far it goes. I plan to use the other account to trade the CBS. Anyway, I'm in this account right now. I can open the other account later. But what I'm going to show you is, now once the market opens like this, right, I will start watching my trades performance. And here's the one. I told you earlier that I have some trades that I simulated during the daytime. Normally I have longer list than this. I have like 15 or 20 trades. Now I have only few because I plan to use most of my time today to do CBS trade. So I have some trade here which I will revisit later. Not necessarily for this trade hunt. The trade hunt, I just use the CBS. But in this account, right, today I'm up by $2,000. So not too bad, not super, but not too bad. Now, what I like about here, you see that in my account position here, what I always want to do is this column, theta. You see, most of my trades here, most of my trades have positive theta. In fact, all the trades I have here have positive theta. Now, some of the trade you see zero here because it's a simulated trade. I have not entered yet. So those are the one I have not entered. So I have no position, right? Have no position yet. So those are the one that I'm still simulating. But the one that I'm in, they have positive theta across the board. Yeah. So when a trade has a positive theta, what does it mean? It means that time works in the trade favor. Time decay works in a trade favor. So when I'm sleeping, those time decays effects will actually will bring in some money for me. So the theta, total theta for this portfolio is 1,180 something, right? What it means is if the price doesn't change across the board, if the prices do not change at all, or volatility do not move at all, everything is unchanged, every single day, this portfolio will bring me $1,180. So right now, the account is making 2004, but if everything else is unchanged, tomorrow when I wake up in the morning, this $1,000 from theta will be added to this. So instead of making 2005, tomorrow I expect it to become like 3005 or 3006. That is the theta impact. You notice that most of my trade, I mean, in this case, all my trades have positive theta because I am a net option seller. And this is a different thing versus like 17, 18 years ago when I started, I was the net buyer all the time. So theta works against me all the time. But now I told you on Sunday, I switched to being the option seller. That's why theta works in my favor. Time decay works in my favor. This is the best thing you can do with option. You can be sleeping, you can be traveling, you can be on vacation. This position brings money to you. This position bring money to you. That is important thing. Yeah, very important part. Now, delta positive means you need the market to go higher to make more money. If the market drops, it will hurt the trade. Yeah. So that's the thing, right? So this account right now, if I look at this, it is making 2007 or 2006 now. And in my trackers here, you see, I have 5 accounts, totally $1.4 million. And the account that I just showed you is this one, 2005. So this account is making 2005. So the net liquid is $200,000 and now making 2005. If I switch to this one, yeah, 2005, right? 2005, exactly the same because it is a live streaming, live updating, right? So every single movement of the data on the Thinkorswim, it will be updated in this Excel file. So the way I monitor my trades performance, first of all, I look at the dashboard. So today with 5 accounts, they're doing fine, right? I'm right now, if the market closed right now, I'm making $20,000, right? But I expect more. I expect theta will be added to my balance, to my profit for the day. And then tomorrow, if there's no change in the price, I should expect more than $20,000, right? So that's the way I work, right? So these 5 accounts in total have generated 75% return as of right now, right? Versus year ago, it's up 75%. So index 175 means it's up by 75%. So I started at like $830,000. It's now $1.4 million. So I'm making like more than $600,000 year to date for less than 7 months, right? Now, among the account, I show you this account on Sunday, it was $500,000. Today, it's like 550. So I make extra $15,000 over the past 2-3 days. And that one is the best, right? Performing the best. So the return is like 138%. The rest of the accounts pretty much like 50% return for the year. Now, this relatively big account generating less, only 134, I mean 34%. It was because I I only started this account recently. So no, it's there for a long time, but at a smaller amount. But I only started pumping more money into it in May, starting in May. So that's why it kind of lagging, because in the previous, I mean, from January to January to April, it was like it's like dormant account. I just keep there, earn 5% interest. That's it. I did not do anything much. But then after I retire, I have more time. Now I'm using that account to test some new strategies, which hopefully one day I will introduce it to you. And that's why it's lagging behind. But in fact, if you adjust for time, it's doing quite well. It's doing quite well, right? So I'm very happy with what I've been doing for this year, right? The thing is, these trackers that I developed, and this is proprietary. When you sign up, you can get this tracker. You cannot, I mean, you can develop your own one, but this is one that I designed for myself. And it works when you have Thinkorswim running in parallel, and only works with the Microsoft Windows, right? If you run by MacBook or iOS, it won't work because it uses Visual Basic Code, right? The one that Microsoft still supporting. I have a small account in Tastywork here where I'm so testing some of the strategies. It's been doing fine. So 57% year to date, not bad. But I keep it small. Now I'm thinking to maybe in the future I simplify it. I will move that money to IB because I earn 5% on cash. This one also sitting on bunch of cash and earning nothing. All right, so those are the ones that I'm doing. So 5 accounts actually doing quite okay. Now let me open the, let me continue see any other points. Yeah, so I need to check the performance of all the trades using Excel tracker or take any necessary action. So after looking at the dashboard, right, it looks like all accounts are doing fine. I will start looking into each of the trades. Okay, so I double click here. It goes to the first account. When I show you this account earlier on the other Thinkorswim account, they are on they are on Crouching Bull. This is the wrong one. This should be Crouching Bull. This is Crouching Bull. So they are on Crouching Bull, right? So this Thinkorswim account is dedicated for trading Crouching Bull only. You see on the trades here are Crouching Bull and nothing else. And this is an account that I used to test. I used to test the Crouching Bull since last year, and I've been using it until now. Relatively small account, but performance is quite okay. And today it's 1,005. So later on, I will go through the trades in this account because it's on CBS. This is a way for me to illustrate to you how I deal with the CBS trades, right? So that one, and then I look at the account. This is the one that I say it had been been inactive for some time. I just activated it, and it quite doing quite fine. And then there's a small one in Tastywork, and then this is the account when I trade all kinds of strategies. And this is the account I use for OTP, Option Tactics Playbooks, and also for Well Academy option, which is a masterclass students, right? So those are the ones that I use this account for. So every day, because I serve the OTP community, I need to check how the OTP trades are performing, because that's the thing I need to update or take any actions every day. So for example, I have the Crouching Bull on TMS for the OTP community. It's making some money. Not again, on Sunday I told you this is the 3rd round. So I took profit for 2 rounds. Very good profit, and this is the 3rd round that I entered recently, and it managed to make some small profit. Crouching Bull on Sabbath also making some profit. Nike. So there's 2 columns here, two area here. This is the the profit since I opened the trade. And this upper number here is the profit or loss today, right? So today, because Nike goes down, it's losing like $9. But since I opened the trade, it's still making like 259.58. It's okay. Expedia today, it dropped by $1 and hurt the trade by 55. But overall, the trade is still making like $1,400. Which is okay. Capri Holding, this is a very frustrating stock since I entered the trade. The price kept going down, but I kept rolling it. I don't know how many times I have rolled it. 1, 2, 3, 3 months. I've rolled it for 3 months. And despite the fact that the price has been going down, the trade still managed to make some small money. It's okay. That's the benefit of crouching bull. You do not need the price to go higher to make money. Even it goes sideways or down like this. This one is not like collapsing. It's steady going down. Yet I'm still making money on crouching bull. Google trade, this is a very good one. So make like almost 90% right now. And I have rolled it for 1, 2, 3, 4, 5, 6, 7 rounds, right? So I am about to, I'm still very bullish on Google, so I'm not taking profit anytime soon. The another crouching bull on MS, which is Morgan Stanley. So yesterday, Morgan Stanley has a very nice pop. Today it continues to go higher. So the trade also making some nice profit here. This is, so those are the crouching bull, right? And then I have other trades as well, like the diagonal spread on XBI. This is a very new trade. I just entered it a few days ago, and it's okay, making some money here. And then I have another diagonal spread, which I entered in March, and it is losing money. Though the profit, the loss has been improving a lot. There was time this trade was losing like $800-900, okay, about $900. Over the past few days, the price has recovered and the loss has reduced to about $300. Similarly, for the MGen, it used to be like losing $1,000, but the price recovered and the loss reduced now to $200. So that's the way, you know, diagonal spread, crouching bull, it has a long expiry. So you can roll many times, buying more time for the price to recover. And once it recovers, the trade will turn around from losing to breaking even and then to even make profit. So I'm very confident that the Danaher and the MGen trade here will be turned around soon enough, right? So that's the way, you know, this diagonal spread is one of the strategy in the curriculum. And this is a synthetic spread on TLT, which have been going nowhere. So kind of break even kind of trade. This is a more frustrated trade. This is a Disney. This is crouching bull as well. And you know, Disney price has been declining steadily and a lot. I rolled it down a few rounds, 1, 2, 3, 4, 5, 6 rounds, and still losing money because in this case, the price has dropped a lot since I entered the trade, right? So anyway, there's still like 6 months to go or 5 months to go, 5 or 6. Yeah, 6 months, almost 6 months to go. So then I don't have to worry because I believe eventually Disney will recover and then this loss will be turned around. So these are the OTP trades that are still open. And then I just see if there's any trade I need to take action, either taking profit or roll the option or close the trade to cut loss kind of thing, right? The rest are, there's few more. Okay, there's few more. This is a Moonbank collar also for OTP trade. This is the one I entered yesterday for NVIDIA. This is a ESS, earnings sniper spread. I entered it for OTP as well yesterday. Still early, so P&L could be very wonky. Meta, another ESS trade I entered a few weeks ago. So those are the OTP trades. The rest below here are pretty much like masterclass trades. So the one that I enter live every month with my masterclass students, where I teach them live and have the gathering live, do the live trading like this one every single month. So those trades that I enter with them, they are doing fine, right? This one also Crouching Bull making $1,000 profit. ADP also Crouching Bull making $1,000. Expedia making 1,005. ESS on Meta's kind of break even. Disney's break even. TLT losing 200. So this is not part of that. Yeah, so this gathering is the live monthly gathering. So this is Crouching Bull on Amazon making $700, and Viva, another Crouching Bull making 1,006. There's a losing trade as well. This is a new strategy, still testing. We call it double bull strategy, right? Again, in masterclass students, sometimes I just do some new trade that I am still testing. I told them I'm still testing, but I explained to them how it works. So masterclass students are the one who get to know my tests and my latest knowledge first, right? So those are the things, you know, that's the way I do every day. I just watch those, and I watch other accounts as well, mostly Crouching Bull as well. They're doing fine. Yeah, so many of them making like 5,000, 2,000 here and there, a few $100. And I mentioned to you the big one, Google, right? Making $47,000, right? Microsoft for $15,000. UNS has been doing well as well now. Amazon like $26,000. So those are the big trades, because where I have a huge conviction, I will enter with the bigger size of the trade. Now there's a big losing trade as well, like Disney. I mentioned this is like losing $10,000, but I don't have many of them, fortunately. Most of my trades are very profitable. I have this one also losing 2,000, CVS losing 3,000. The rest are new strategy I'm testing, so I don't get into it. So overall, so 5 accounts here, how is they are doing right now? Still making $23,000, right? So earlier it was 20,000, now 23, and the market is kind of flat. You know what? Because the theta now every minutes it will pass some value into the P&L. So that's the theta, how it works. All right. So that's my routine. So I attend to the OTP trade and the Well Academy option trade, which is a master class trade. And I take action. Every time I take action, I inform my community for OTP. I inform them even when I'm queuing the orders to wait for it to be filled. I also inform them, right? And then finally, if I don't have any activity like today, I will check the validity of all the trade that I pre-simulated. Remember, I pre-simulated some of the trades here. I've pre-simulated all those trades before the market opens. So now the market has opened, I will check the validity of those trades. And if any of them are good trades or valid trades, then I enter. Yeah. That's part of my routine. And finally, tomorrow, when I wake up, I will record on the trade details in the Excel file, the one you just saw. Otherwise, I won't be able to monitor, right? So I need to record on the details in the Excel file. So when the market opens again, I will be able to track them. Yeah. So this step can be done in the following days, because you want to use the trading time here to do the real action. And the recording part, the journal recording part, can be done later. Now let's do the hunting together. Now it's time, right? Normally I start the action after 10, now 10:15. So good time to go hunting right now. Before you go hunting, check some of the checklists. Normally we need to identify what is the animals I want to hunt today. Okay? What animals I want to run to hunt today? Is that a roaring bear I want to hunt today? Yes or no, everyone? Yes or no? A bear trades I want to hunt today? No, right? Obviously no, because we are in a bull market. No point to go hunt the bear. Yeah, it's a wrong animal to hunt. If you go to the bear, look for the bear today. It's the bull time. you should go for the bull, right? So crouching bull, yes, definitely you want to hunt the crouching bulls today. How about sleeping boar, right? Bear, bull, or boar? Which one? How about boar? Yes or no, everyone? Actually, the crouching bull strategy is designed to trade both bull or neutral market. I told you, right? The trade should be doing fine if the stock price goes sideways. So if the boy is sleeping and the boy is fat, good, big board, it's okay. I don't mind, right? So if I have extra buying power, yeah, I can go for it. If I run out of idea of bull trades, then I go to the board, no problem, right? How about the weapons? Yeah. So I told you that in the curriculums, we have something like 20 different strategies, 20 different kinds of weapons you can use. But because you only learn one from me on Sunday, which is crouching bull spread, so today, for today hunting, I only use CBS rifle. All right. But when you master other rifles, other kinds of weapons, you can use all kinds of weapons. But today, we only use one weapon, which is CBS rifle. All right, everyone? Finally, check this one. Ammunition. Is that enough or not? Right? Sometimes you have some good trade ideas, but you run out of the bullets, right? You don't have enough bullet to shoot. So let's check it out. I want to use the other account to trade CBS. I don't want to mix up with this account, right? So let me check out the other account if they have enough bullets there to go hunting, right? Just give me 1 minute. In the meantime, I will check the chat. Yeah, right. So now the other account. Let's check out how much bullet do I have. All right, so this dedicated CBS dedicated account here, I still have about $30,000 bullet, right? I still have $30,000 buying power. Normally, when I enter one CBS trade with one contract, right? If the stock price is around $100, $150 per share, the buying power would be about less than $2,000, about $2,000 or less. So if I hunt small size of crouching bulls today, like $100, $150 per share, $30,000 here would be enough for me to hunt, to shoot like 15 trades, 15 bulls. Yeah, more than enough. That's too many for a day, right? But in case you suggest some big bull, right? You come up with some big bulls, and I love it. And you know, big bull, you need more bullets, right? So big bull, like, I don't know, let's say Tesla or some like, or United Health, like $500 kind of stock. Yeah, you need 4 or 5 times of buying power. Yeah, so depend, small bulls or big bulls that you suggest, we may or may not run out the bullets here now, but I have the way to manage it. In this portfolio, which is on CBS Trade, by the way, also making about $2,000 right now, which should link to the other accounts. So 1,009, 1,950, 1,950, the same, right? Exactly the same. So it has to be the same. So this account, I have some CBS trades that have achieved or even exceeded my profit target, which I will go through. And I may take profit, release buying power, release a bullet so that I can use it on big bulls. All right. But let's go hunting first. If we need bullets, then I will go to some of the trade that I can close. Okay. Now let's start with some of the trade that I suggested on that day. But before that, let me also remind you, refresh the strategy, maybe 10 minutes to refresh the strategy, recap on the CBS strategy here. Step number one, check the fundamental. Is that the good stock? The stock that I don't mind owning? If the answer is yes, 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 then okay, you pass the first step. Second step, it is a good stock, but is it trading below its intrinsic value or fair value? If the answer is yes, then go to the next, right? So I don't trade a good stock that is well overvalued, like Apple, Nvidia kind of thing. It's overvalued, right? Then I will skip it. Okay. But if it's still below intrinsic value, yes, that's a good candidate. Number three, technical setup. Is the price bullish or at least like stop declining or bottoming and is due for a rally or rebound, right? And if I enter the trade with selling a put there, the put that I sell would ideally be below a support level. Yeah. So I don't want the price to hit my put strike. Yeah. And the construct of the trade, as I mentioned, three-legged trade, right? Leg number one, buy at the money call. The expiry is about 6 to 9 to 12 months, okay? Then you sell a higher call to cut the cost of the long call. So typically you sell one standard deviation above the at the money, right? You collect some premium that reduces the cost of the trade. And leg number three, you sell a lower put, ideally also one standard deviation below the current stock price, right? So then you have a very good margin of safety. Now, the put that you sell would have a shorter DT, shorter expiration, normally 1 month, right? So that every month I will roll it again. So then I can roll like 6 or 9 times so that I can reduce the cost of the trade or collecting more premium and increase the profit of the trade. That's why you see most of my crouching bull trades have been making money because I run many rows for many rounds already. Yeah. So with that in mind, simple enough, everyone. Good stop, trading below intrinsic value. Technical, at least it's not like collapsing, not declining anymore. And the construct, 3 legs, at the money, buy a call, sell a call, higher strike, long DTE, and lastly, sell a put at the lower strike price, short DTE. All right? And roll the short put multiple times. Let's go hunting, right? Let's go hunting, and let's start with the 3 AI stocks that I talked about on Sunday. Remember the first one? My most favorite one? It's Google, right? Or Alphabet. All right, so let's look at Alphabet. Let me go through the thought process. The market is still at the same $20, 20 points up. Let's open the Google or Alphabet here, GOOGL. That's the one that I prefer to trade. And look at the chart, right? First of all, you need to ask yourself, I need to ask myself, is Alphabet the stock that I don't mind owning? And the answer is resounding yes. This is a stock that I would love to have. Even I have it already, but for this purpose, I don't mind adding more because for me, this is a big AI player. Yeah, and the market still not fully value the AI advantage of what Alphabet been doing. all right? They have tons of data from how many years of searching, they do all kinds of, they are the leading in the search business, right? They have lots of data, and they use those data to, they can use the data to train the AI. The more data they have, the better the AI will be. They will become smarter. So I believe in the future, the AI eventually be developed by Alphabet and be used by people will be the smartest, if not one of the smartest, if not the smartest AI, because because simply they have a lot of data to train the machine. Okay. So first question, is that the stock that I don't mind owning? Yes, I don't mind owning this. I'm using YouTube. I'm using search, Google search every single day. There are two companies that their products I cannot live without: Alphabet and Microsoft. That's tell you. Even now I retired from corporate, I'm still using Microsoft on my window for my Excel file, the one I just showed you, right? Because if I use Mac, I cannot track it. So I cannot live without Microsoft as well. So Microsoft and Alphabet, these are the two companies that I cannot live without. So Alphabet definitely the one I would like to own. Question number 2, is that trading below intrinsic value? By the way, on the first point, because of the CBS should be used on the fundamentally good stocks, don't use it on lousy stocks that are losing money. Some are very speculative, like meme stocks kind of thing, hype stock kind of thing. Don't use it. Only use on fundamentally good stock. Because why? Because you sell the cash secure put there. When you sell a cash secure put, you have to plan for the worst case where you have to own the shares. And you do not want to own lousy stock, right? You want to own solid company stocks. Yeah, the companies that making tons of money and cash flow every single year. So because of that, they would not going under. They would not go bankrupt. Okay, don't do it on speculative stuff. Okay, so Google definitely making lots of money, right? Question number 2, is that trading below intrinsic value? Yes, my intrinsic value for the stock is 153. 153 right now at 123.93 divided by 153. It is 19% discount right now. Very significant discount. All right. Good stock, trading below intrinsic value. Tick. Number 3, technically, is that bullish from the technical setup? Yes, you look at it, you see on the moving averages are sloping up, right? The 50 moving average are sloping up, 150 above 200. They are all sloping up. Uptrend is very clear. Okay, so definitely this is on bullish trend. It's no longer like declining like last year, right? It's above everything, like above trend line. So it's good. So technically it's a bullish one, right? Recently it's retracing, which is good. In fact, if it's not for today, I would wait for maybe 1 or 2 more days. What I really want to complement with this one is this stochastic. Ideally, I want to see the stochastic to go near the oversold region. Because if near the oversold region, the chance for it to bounce very good, very high. Right? Right now it's not near, but it's good that there's some retracement here. What I'm thinking here is I enter the trade today. It may be a little bit too early, but it's fine because I sell the cash secure put, which have like very far OTM, right? So I will have a big margin of safety, right? Even if it drops, it won't hurt the trade that much. But in the ideal world, I would wait. I would wait for this to bounce off at least this level. This is the last swing high over here. And then this one get more to oversold and then dip into that and then bounce. I tell you that would be the best entry point. The moment it dipped below that and then stochastic drops below the 20 level and then reverse up. That's the beautiful setup. Right now it's a little bit too early, but it's okay. As I said, you have a good margin for error for the trade. So technically it is fine. Not ideal, not the best, but it's okay. Fundamentally it's good. Technically it's okay. Right? Now let's construct the trade. Let's construct the trade. Go to the option chain here and 3 legs, right? Legs number 1, buy a boom call spread expiring between 6 to 9 months or even 12 months, right? So I can also choose January 24, which is about 6 months, or I can go even further. Let's say if I go to March, which give me another 2 months, right? So that will be longer. Maybe I do this one, yeah, to avoid crashing with my current existing position. I already have one position in January expiration. No, okay. So let me go like this. I go with this, then at the money will be around 124, right? This one you don't have like $1 steps, right? It's harder. So maybe I go back here to see if I can try $1 step. This one I have more granular. I don't have $1, but I have at least like $2.50. The other one I have like $5 steps, which is not so ideal. I like the option chains that have more granular steps, like ideally $1 step. In this case, $2.5 steps. It's okay, right? So this one is fine. Maybe I go back to the January 2024 here. Now at the money is around 123.8. I don't have 123.8 here. So I would choose something like 122.5, which is close enough, right? Slightly in the money. That is okay. So the first leg I will do is I will buy this one. Sorry. I will buy this call, right? I will buy. First leg, buy 122.5 call. Second leg, I will sell 1 standard deviation above this, right? So 1 standard deviation is this one, about $22. Okay, 21.8. So let's do the math. Current stock price 123.8 plus 21.8, around 145. So I will sell 145. So 145, that's where I will sell. 145. Go down further. Let me do it again. 122.5 is when I buy. 145 is when I sell. Yeah. So then I have the moon contact, right? So that is 2 legs. Let's do it. So first, buy 122.5, click the asks. Okay. And then if you use a Microsoft window, right, you hold the control key and then you go to 145 here, you sell, click on the bid, you sell. Here you go, you have a boom con spread in Thinkorswim Record vertical spread when you buy 122.5 and you sell 24.5. And you pay a net debit of $8.68. Yeah, that will be cheaper than if you just buy this one. You cut the cost by 1/3, right? Now you have 2 legs already. The third leg would be sell OTM put option, and ideally 1 month expiration. So 1 month here, 30 days. 1 standard deviation of this one is $10. Right? $10. So 124 minus 10. So you have 114. You don't have 114, go with 115. That's okay. Yeah, 115 is okay. Now 115, you have delta of 20, meaning there's 80% chance that the supply won't drop below 115. there's only 20% chance that the stock price will drop below 20, right? So 20 delta, that's what it means. So the third leg, hold the control key here, sell the 115 delta. Yeah, that's 115 strike price. So now you have three legs. Leg number one, buy a call at the money. Leg number two, sell a call out of the money at one standard deviation above. And these two has a 6-month DTE, right? 6 months. And the leg number three is to sell a put option, one standard deviation, which is $10 in this case, below the current stock price. Right? So now you pay 725, which is the cost of the trade, but doesn't mean that's a max loss. Okay, you pay 725 because times 100, right? You pay 722 now to enter the trade. All right, before you send it out, check the profit and loss profile. Okay, and then check how much they block you, right? The buying power. If you send it out, this my broker here will block me $2,500, $2,479, right? So call it 2005. Now, before I send it out, I will analyze the trade. Analyze the trade. I remove on the old simulation. This is the one that I'm simulating here. This is a typical curve of the crouching bull. Yeah, the crouching bull. That's a typical one. Current stock price is here, and then break even is here. And the point when the loss will start accelerating is the 115, which is a short put strike. Yeah, 115. Above that, you lose some money, but not much. Okay, the serious money will be lost if it drops below 115. But if it goes up, you have tremendous upside. Let's calculate it as well. How much is the upside? Upside is the difference between these two, which is 22.5, which is 2,250, right? That is the max value of this bull call. Minus the 729, that is the entry cost. Your max profit will be 2250 minus 729. That is about 1,521. That is the max profit for the trade. Now, this max profit, assume you don't roll the short put, right? But if you roll the short put many rounds, you collect like $100, this $100, that you just add on top of this. And you just add more premium, more credit when you roll, right? So potentially the trade will make more than this, right? But if you don't roll, you just close it after the first round of the expiry for the short put, then it's 1521. Yeah, so you move on the cursor here, you see the max one is 15 something. Now it goes up, so about $1,500. That's it. How about the max loss? Well, the max loss is this. Max loss is you own the share at 115 and the share price goes to 0. Imagine in the catastrophic event, the share price goes to 0. The whole world collapses, the share price goes to 0. Then you lose $11,500, right? Because you own the share at this cost and it goes to 0, plus the $733. Okay, so your max loss will be 12,233. That is your max loss. Yeah, but this is a theoretical max loss only, right? Because you don't assume that the stock price will go to 0, right? So you go all the way down here. That's your max loss, about $12,000. That's it. Yeah, $12,000 when the stock price go to 0. Yeah. But again, if stock price drop so much, then there's something wrong with Alphabet. Then you cut loss early. Yeah, you got lost early. So in this case, if I enter the trade right now, the stop price is here. I still have some break even below, so I can afford the stop price to drop a few dollars here to hit my break even, right? And as I said, up to here, the loss was still very minimum. So you can afford the stock price to drop on the way to 115, still losing a little money. Only when it drops below that, then the serious money will be lost, right? So just do some math on return on investment. So return on investment, the way I calculate it, return on investment here is the max return on investment, right? Max return on investment is a max profit. Earlier we say that's 1,003, right? $1,500 divided by the buying power. Yeah, whatever buying power they blocked me, I think it one. Sorry, I forgot to. So I think they blocked me 2,005, right? Yeah, 2,450. So if you do the math, max profit 1,500 divided by buying power 2,452, 61%. That is a max profit. Now the max profit here doesn't assume rolling of the cash secure put multiple rounds, right? So if you have rolled it many rounds, the profit could be as high as 100%. And that's what happened to some of my trades. I show you on Sunday. I can show you again this Google trade, not this one, on this account. No, this is different. I have a lot of trades I'm testing, so this is still under cooking, so don't want to talk about it. But let's talk the other one. This one, I think, yeah, Google. The one that I'm making $48,000 here. Double click, it shows this is a trade, right? So this is a trade. Now in this trade, you see half of the money comes from the cash secure put when I roll so many rounds. You see so many rounds of rolling here. So half of the profit comes from the cash secure put, and the other half comes from the boom put spread. So the trade here is actually making more than 100% return on investment right now, right? And then 50% from cash secure put and 50% from the boom con spread. See, so earlier when I showed you the trade, max profit is 61. That is from the boom con plus one cash secure put only. But cash secure put, if you roll so many rounds, it can be very lucrative, very good profit, right? Similarly for Microsoft here, 1/3 of the profit comes from the cash secure put because Microsoft price went up so fast. Amazon, half of the profit comes from the cash secure put. Yeah. Meta, about 1/3 of the profit comes from the cash secure put. So you know, if you, that's the beauty of the cash secure put in the trade. You roll it many rounds and just buy time for the stock price to recover, and then in the meantime you earn the extra profits, right? All right, so this trade seems to be okay, though I say it's not the best technical setup. I would ideally see a dip further and then enter, but it's okay. For this today purpose, I'm okay to enter this trade. Any objection before I press a button? Okay, when to roll the trade later on, I show you some of the trade that I'm in right now and I want to roll it. So I will explain different scenario when I roll, or I will just take profits. Okay, but just bear with me right now with the new trades first, and then I get into my current open trades, and then some of them I tell you I will roll, some of them I say I will just take profit and run. Okay, right now the market is kind of hovering around at the opening level, so it looks like the market is quite resilient. It's every time there's some dip, like earlier it dipped to about 12 points, now it's up again to 19 points. So a lot of deep buyers jumping in and, you know, scoop up some of the stock here. So this one I can I can enter at 7.4 here, or I can bargain. Let's see if I can bargain at 7.35. And it blocked me to 441 and send it out. See, earlier this one was $30,000, but now I send it out, it blocked me 2005, so it become 28.4, right? So the order is here. I'm queuing at 7.35. The market price is 7.39. Google has a very high liquidity, so it's just a matter of if the stock price drop, yeah, it's filled now. It's already filled, right? Always bargain, right? Don't settle for the market price. Just bargain, negotiate, and then go from there. All right. Before we get into the second and the third trades, and I get into your Q&A and your trade ideas, let's have 5, maybe 3 minutes break. Bio break. Okay, I need some bio break here. So 10:47, let's come back at 10:50. Okay, 3 minutes, everyone. All right, everyone. Hope you can hear me. Welcome back, everyone. Can hear me, right? Okay, for lots of questions on the rolling. Later on, you will see I do rolling in front of your eyes. Okay, I will do many of rollings today. Actually, you see, I have so many trades. I just want to roll it. You know what rolling means, right? Bear with me. There will be rollings later, right? Now, one thing I forgot to mention about the crouching bull on Alphabet earlier, that was when I set the sell call at 145. Remember my intrinsic value for the stock at 155, 153, right? So 145 is still below the intrinsic value, which is very good. That means because the stock price tends to run towards the intrinsic value in the long run, right? So definitely I expect the stock price to go back to the intrinsic value, and in this case 150, and that would be good for the trade, because if the stock price goes higher than the short call strike, the trade will make more profit. Right? So it's good. Yeah. So that's another thinking to have. Now, next one is another trade that I also mentioned during Sunday webinar, which is TSMC, right? TSMC is the biggest chip makers in the world, right? Not designer, but maker. They make all kinds of chips for many companies in the world. They have the most advanced chip that many competitors cannot do, right? Definitely is a good stocks, right? And so first of all, the question is it a stock that I don't mind owning? Now, I do not use TSMC product directly, but I use it indirectly, right? The fact that I'm using computer and the fact that I'm using my mobile phone, that means I'm using something that is made by TSMC. So yes, I'm using their products today. So definitely with their economic modes, the dominance in the chip makers, this is a good stock that I like to have in my portfolio. Take good fundamental stock, right? Number 2 is the stock trading below intrinsic value. Well, you need to do your own valuation, right? Now, in case you don't know how to do valuation for your stock, you need to learn it. Yeah. There's many ways for you to learn. You learn from other study, other resources, but the best one is still go with Adam's VMI course, right? He teaches us on how to do the proper valuation for certain stocks, and that will gives you confidence that the stock that you are owning or investing in or trading will be at certain value, right? So once you know this stock is worth much higher than it currently is, then you have a lot of conviction that is so safe to buy at this level. right? So based on my conservative valuation, TSMC is valued at $110 per share. But on the base intrinsic value, which assume a higher growth rate, it will be $132. So currently the stock price trading at 103. It's about 30% below its intrinsic value, right? So yes, good stock that I don't mind owning, and yet it is still trading below intrinsic value. Of course, there will be risks on the China geopolitical issue, but again, it's been talked for many years, so I think it's very low probability, right? So then I definitely want to enter the trade. And by the way, I mentioned at the beginning, for OTP trades, I already took profit 2 rounds, and yet the current setup, still good to go because it's still below intrinsic value. And technically, it is on an uptrend. You see that 50 moving average above 150, 150 above 200, and they are all sloping up. Clearly, this is on uptrend. Yeah, clearly on an uptrend. The past few day retracement has been a very nice opportunity to get the overbought, less overbought now, right? Used to be very overbought. Right now, it's retracing lower, so it no longer overbought. I know the earning will be out tomorrow, which is okay, right? When you invest, you don't care earnings. You invest, earning can be good, can be bad, doesn't matter, right? As long as the long term, the stock price goes higher, that matters. Yeah. So in fact, if you do this one before the earnings, it's a good thing because the cash secure put that you sell will be at the higher premium. Yeah, so you can collect more premium from selling the cash secure put, and then that would reduce the cost of the trade even further. So I don't mind entering the trade right now, especially it well below the stock intrinsic value. So fundamentally, it is good. Technically, it's also very nice. And I can get a good premium by selling the classic put before the earning release tomorrow. Yeah. So tomorrow you enter the trade right now. Tomorrow, if the price falls or gaps down, the trade would have some temporarily hurts, but it's okay. As long as, the fundamental is still there, I don't have any concern. And by the way, you sell well below the current stock price, so you have some margin for errors there also, right? So with that in mind, I will go to and by the way, the market has retraced a little bit. That's okay, yeah. And Google turned negative. Wow, let's see. Okay, so TSM, this account, I do not have position on TSM. Therefore, it's good to enter, right? Because I want to enter anyway. So the same thing, I can just make it simple. I use the same DTE, which is 6 months, January 2024 expiry date. And right now, the stock price is right in the middle between 100 and 105. So which one I would choose, right? It's really up to you. If you choose 105, it will be cheaper, slightly cheaper. But then the stock price needs to go a little bit further for you to make money. If you buy at 100 strike price, it will be more expensive, but you are in the money already, so the stock price doesn't need to move up a lot for you to make money. So really depends. For me, my preference, I will buy slightly in the money. Yeah, I buy slightly in the money. So in this case, because it's right in the middle, so I will buy 100 strike price. I will buy it here. And it indicates that the one standard deviation is $20. So if I add 20 here, that will be 123, but there's no 123. To have a more upside gain, I would sell 125, a little bit higher than one standard deviation, right? But it gives me more headroom for upside potential. So I will sell 125. And by the way, the 125 is still below the stock intrinsic value, right? Based on my valuation. So my valuation is 132. So if I sell 125, it is still below that, right? So there's still room for the stock price to run towards the intrinsic value in the long run. Hence, it will benefit the trade, right? So with that, then I will buy 100 strike and I sell 125. So this boom call, I pay $8.83. Against that, I will sell 1 month, which is 30 days, DT, and $9 below the current stock price. Current stock price 103 minus 9, so you have 94. So I need to sell 94. Unfortunately, there's no 94. I sell 95. That's okay. $1 different doesn't matter. You still have like 80+% chance of winning in this classic Q put, right? Delta at 18 means there's 82% chance the stock price won't drop below this 95. Yeah. So very high chance that you will get this money for free, the 95 put strike here. Yeah. So hold the control key and sell 95. I will reduce the trade cost further to $7.74. How much the broker will block me for the buying power for this trade? Well, they block me slightly less than the Google trade because the stock price is slightly lower also, and about $2,100, right? What is, so I need to pay like $774 for one contract, okay? Analyze the trade, similar chart. The max profit will be the difference between the two boon strike here, which is 25 point, which is $2,500, right? One contract minus 774. That is a max profit. It's max profit assuming no rolling. Yeah, no rolling. If you roll, you can make more money than this. And then the broker will block me $2,100 for the buying power. So max return on investment is 82%, assuming no rolling for the classic put. But if you roll 2, 3, 4 rounds, this could be easily more than 100%. Yeah, if the stock price goes to 125. Good trade. And for me to lose serious money, the stock price needs to drop below 95. 95 is like 8% down from here. So there must be some serious miss on the earnings tomorrow for the stock price to gap down that much. So I have on the 95 is somewhere here. The stock price need to gap down to that for me to make serious loss. If it stays above, good. Either profitable or break even or losing a little money, right? I think it's a good trade. I love it. I bargain again, right? I bargain again. The stock price dropping right now. So I'm bargaining. Maybe I put 765. Right? So this one will block me $2,100. Yeah. I think this bullet still enough, right? So I have $30,000. Each trade will need like 2,000, 2,005. I can afford entering new like 8, 9 trades today. So queuing right now at 765, and then market price is 7.68. Okay, let's see if it can be filled. So right now the market has retraced to half of the gain earlier. Let's see how my portfolio is doing. Portfolio gain is also down because it's very correlated to the market performance, but it's still up $17,000. Not too bad, not too shabby. All right. So, okay. That's a pretty good day. So looks like this is holding here. If I really keen, I need to raise it a little bit to 768. Let's see. This also a relatively good liquid stock. Liquidity is good for TSM. So I don't have issue. Now, I normally avoid the low liquidity stock, the one that has no weekly options. A bid ask is very wide. That's one I would avoid. But with the very tight bid and ask, I love those kinds of stuff. All right, so second candidate is there, waiting to be filled. Maybe if I'm keen, I raise 2 more cents to 770. Yeah, hopefully it can be filled. All right, just kill that. Now, the third candidate that I mentioned on Sunday was Amazon. Yeah, Amazon, another AI stock, right? Another AI stock. Amazon is up quite strongly today, almost $2. Now, among the three, right? This one, I mean, this one technically still tradable, right? Because answering the same question, is that good stock that I don't mind owning? Yes. Is that stock trading below intrinsic value? Yes. Because my intrinsic value for Amazon is like 160. Right now, it's still like 20% below that. So technically, I still can trade this one, no problem. But the stock price has run up quite a bit, right? You see it's a little bit further away from the moving average. Looks a little bit stretched, not too stretched. Too stretched is like if 90-degree up, like parabolically move up, then that one I will avoid. This one is still tradable, still tradable. The past few days, I was hoping that this one would retrade to near the moving average, and this one gets to a little bit oversold. Then it would be ideal for a new entry. But I think it's okay. I mean, let's see if the safety, the margin of safety is far enough from the current price and ideally below the support level, which is the moving average here, then I may still want to enter the trade. All right, same construct. Okay, so answer the checklist already. Good stop below intrinsic value. That's already there. And by the way, this one, TSM has gone up. TSM because the stock price, yeah. Maybe I raise it to 7.75. $7.75 mark price 7.79. Okay, leave it there. Now Amazon, go back to Amazon. See if I can get a good trade or not. Now, okay, before this one, before I enter the Amazon trade, you see that I do have the one position on Amazon. Right? One position on Amazon here. I have one contract. Let me show you one position. See, I have one contract here. Yeah. And this one, the bull call. Okay. Before I enter the new Amazon CBS trade, I need to take action on this own one. Right? And I share with you my thought process, why I choose to close a trade rather than rolling the short put for this trade right now. So let me go back to that account, this one, and let me go to the trade itself. This is the one. So this trade, you see here, I entered the trade when Amazon price was at $100 per share at the money, right? And I sold 125. That's a short strike call, right? And I have rolled this Casacule put many rounds. 1, 2, 3, 4, 5, 6, 7 rounds. Okay, I rolled it for 7 rounds. The profit from the Casacule put alone is 775, not including this 88. If I include the 88, that will be $800 plus. Okay, so about 40% of the trade profit has been from the Casacule put, and the 60% is from the Booncoin spread here. Booncoin spread, you see it, $1,200. Yeah. So the trade is making $2,000 plus. Okay, more than $2,000 for one contract. One contract. Return on investment, 120% already. You see, I told you that if you roll the classic you put for multiple rounds, the return on investment on crouching boom could be beyond 100%. I have done it many rounds, many times. So this is one example. Now, some of you may ask question, when did I enter this trade, right? So I do have that below here. Let me go down. I show you the history of that trade as well. And I go to the platform to show it to you as well. So this is where I track the entry time. So Amazon, this is a trade here, making 2,000 plus. I enter it on 23rd January 2023. Yeah, when the stock price at the entry was 97.2. Okay, the original sell put was the short put was 85, one contract. Okay, and then now the stock price has gone up to 134. Okay, and it's still open until today. I have been in this trade for 177 days. 177 days. Okay, so I've been in the trade for that long. So let me go to the platform and show you that. Monitor account, Amazon here, and open from the 1st of January to today. All right, so you will see here, this is a trade. I enter it on, this is 2 a.m. in the morning, Singapore time. So technically in the US time, it's still January 23rd, right? January 23rd, that's where I enter the trade. And I roll it 1, 2, 3, 4, 5, 6, 7, right? What I showed you earlier, 7 rounds, I roll it, 7 rounds already. Every time I collect like $, dollar plus. So 7 rounds, I collected like more than $7, would like pay for the debit at the entry already, right? So that is a trade. So I've been in the trade for 177 days, right? Right now, the trade still have 93 days to expiration. The boom call, still 3 months to go. But why I'm thinking to take profit here? Number one, the stock price has gone well above the short strike. Yeah, when the stock price goes beyond the short call strike, the profit is capped, limited. Yeah, it capped. So yes, you still can make some profit, but pretty much capped. Now, why I'm still saying you still can make profit, because you look at this intrinsic value of the short call is still like 600, and intrinsic value of the long call is 200. There's still $400 net remaining intrinsic value in the boom call for you to squeeze. Meaning, if the stock price stays right here, this trade will get another $400 by the expiration time. Yeah, $400. But I need to wait for another 3 months for it to happen. Yeah, so then I would rather close a trade, use the buying power to enter the new trade, okay? Rather than waiting for another 3 months to earn the remaining value. That's the number one reason. The stock price has gone too much up, okay? And the upside is capped. Now, number two is I still can roll the short put here higher to higher strike, as long as it's still below the intrinsic value of the stock. It's still okay. So I still roll the short put higher, collecting more premium. But that's it. That the additional premium will be the additional profit for the trade. But if I do that, I will run the risk of the stock price retracement, because it's already like shoot up so much, right? So, but the main reason continue to be the upside of the trade has been capped, right? So then I would rather release buying power, and if I like the stock still, I enter the new trade with the higher strike price, higher headroom, bigger headroom for upside. That's what I'm going to do. So before I enter the new trade on Amazon, I will close this trade to take profit first. Okay. So in this case, I'm not rolling, but I'm taking off the table, take money off the table. So I need to close the 3 legs. So I will do the opposite order of the current position. So this one I am short, right? So that I need to buy to close. This leg I'm long, I need to sell to close. And this leg I'm short, I will buy to close. So I need to close on three trades, three legs together. So in Thinkorswim, you go back here, open the position here, and then you do the opposite. So right now, this one, I am long one, right? I sell to close. This leg, I'm short, I hold the control key, I buy to close. And finally, the short put leg here, I'm short, so I will buy to close. So if I close three legs here, I will collect about $21 or $2,100, which is consistent with I'm tracking here. I can get like $21 plus, yeah, because it likes updating, right? So then I will bargain this one, 07 the same, right? So I bargain it to 21.10, close, Senna. So now it is nearby the mark price there. So see if it can be filled. In the meantime, the TSM price has gone up because the stock price went up a little bit. Maybe I raise it to 7.78. Yeah, or 7.8. And the closing order on Amazon should be filled soon because it is near at the mark price. All right. So that is the trade I am closing. In the meantime, I'm waiting for these two orders to be filled. Let's see. And then after I close, I will enter the new trade on Amazon, right? That's what I'm saying. Another one I also closing, I'm thinking to close as well. Same logic is SPGI, which is S&P Global. This one I enter when the stock price was at 350, is now 423. It's making like $4,000, about 48%. And the stock price just crossed the short strike. This one, technically, I can still roll one more round because, you know, the net of the intrinsic value here, still like $1,600 remaining intrinsic value in the bull call, which I can squeeze. So maybe I roll this one more round. But let's look at the SPGI. Look at the charts. SPGI. The chart looks so stretched, right? Earning is coming. I think it's to be safe. Maybe I take the profit off the table also, because the chart looks so overstretched right now, overbought, and the retracement looks very imminent, right? I don't want to roll the short put just to see the price to plunge, right? In this case, the price moves a little bit too 90 degree, a bit too much on the 90-degree push up, right? I think the retracement looks very imminent, unless the earning is extremely good. To be safe, you know what? I'm closing the trade as well. So SPGI, take the profit. Anyway, I'm making $3,700, almost 50%. And the stock price already gone beyond the short call. Okay, so good money. Don't let it go wasted, right? Same logic. The way I close it, right? Go to this trade here, sell to close. This is the one that I'm long. Hold the control key, buy to close. And that's DSM now filled at 7.8. And then last leg here, this one I'm short, so I buy to close. Yeah, so I will collect 53.45 of 5,300 and something, right? So that will be in line with this 5355. Yeah, so that's what bargain, let's bargain. Let's say if I can get 53.9. So there are two closing orders here. The Amazon should be, oh, it's wonky, a little bit wonky. Amazon, I think it's okay. This one I need to read. No, actually, SPGI has low liquidity, so the price is really wonky. I'm now queuing below the mark price, still not being filled yet. But sometimes it's like this, right? It can be 54 plus, can be 53 plus. Maybe it's somewhere lower. Let's say 85, because I'm desperate to close it. Market is overbought, by the way. Market is really overbought. To be safe, I just take profit. You see, the market's, yeah, so it's SPG has been filled at 53.8. Now, let me show you how to record it, right? So once I close this one, I will record it in the following way. So 550 call, I close it at 85.6. 85.6. Okay, one leg. Or 85.16. 85.16. And then the 240, the 420, I close at 31.31. This one, 31.31. And the last leg, I close it at 5 cents. This one, 0.05. Okay. So when I close it, I remove the colors. And I hard code on the P&L and the return on investment. So hard coded. Oh no. Here we go. Yeah, so I hard coded. So this trade made 3677 and then 48%. So once I've done this one, I go down to the trackers below. I will hard code the one below as well, right? Hard coded face value. So go here, SPGI. So for the close trade, I just gray it out. So I copy the graying here, SPGI. Where's SPGI? Here you go. And copy format. So this one, hard code, right? Hard code 3677. The price at the close, hard coded also. And the date of the close, which is today, 19th of July. So I hard code this one. So on the gray numbers are hard coded, right? So then, you know, the one that's still white here is still moving. Yeah. So the Amazon is still moving here because I have not closed it. So when I've done this one, I will remove this. Sorry. I will hard code this one. Okay. So tomorrow I will remove this one from my account, right? So let's look at Amazon. I think my Amazon, the market has gone down. Amazon was up earlier $2, now $2. Yeah. So maybe I reduce this one a little bit, see if it can be filled. 05. Yeah, so now still similarly, I will record the close order here, or close trade here. So Amazon, the 100 call, I close it at 3687. Amazon. Yeah. 3687. All right. And then the 125 call, 1581. 1581. And then the last one, 115, I close it at 1 cent. 0.01. Yeah. Hard code everything and then hard code below. So I don't do it everything now. Tomorrow I will do it. Use the time here for trading, right? Just show 2 examples for you to see. Yeah. Now, some of you asked me to show you how to roll. Okay. Before I roll it, let me enter the new Amazon trade. Remember, I'm still keen on new Amazon trade on the setup we talked earlier. Now I close the old one. I will open the new one because I still like the trade, right? So go back to the Amazon trade earlier. Let's do very quick simulation again. Amazon, go to January, and then at the money is 135, right? At the money, 135, buy 135, sell what? Sell at one standard deviation above the current stock price. So 27 plus 135, 135 plus 27. So I need to sell like 162. There's no 162 here, but there's 162 and there's 162 here. Okay, so I will sell 162. So two legs. Leg number one, buying 135, sell 162, one standard deviation. Check if 162 is above or below intrinsic value. Not important, but nice to know. It's about at one standard at intrinsic value, which is good because the stock price tend to run towards the intrinsic value in the long run. So it's good. So right at the intrinsic value of the trade of the stock. Now the last leg will be sell 30 day, one standard deviation below. 135 minus 13 or 14, right? So I need to sell like 121. There's no 121, I sell 120. It's even safer, right? Because it's below one standard deviation, slightly below, which is good. So I sell this one. Total, I will pay $8.47. If I send it out, they will block me around the same 2,100, 2,200 buying power. Analyze the trade, same chart. Yeah, same chart. Current stock price is here, break even is here, and even if it drops to this one, I still can, the loss is still manageable, right? Only after it drops below 120, and that's where you see the serious loss there. If it goes higher, what is the max profit? Well, the max profit will be the spread difference here, 162 minus 135, 27 times 100, so that is 2007 minus the entry debit, 847. Okay, so the max profit will be 1853 without rolling Kaseki put, divided by about 2002, that's the buying power, 84%. And if you roll the Kaseki put a few rounds, you get 100%. Yeah, similar to the trade I just closed. All right, so here I can bargain a little bit. The price has gone up a little bit here. Let me bargain to 845. Send. All right, so now I close two trades. I enter two trades. The third trade is still now pending. Those are the three trades idea that I share with you on Sunday. I still have few others, but I don't want to share others candidate yet. I want to hear from you, right? I want to hear from you, okay? First of all, just bear with me a few minutes to hear some testimonial from our students. So this is James. James apparently is a relatively new student. I think he joined me, I think last year. And in May, he wrote to me that he shared with me. I mean, I say, okay, end of May, he made 35% return on investment. He said it's amazing ride for a beginner. Yesterday, July 18 here, he wrote to me again. I did not ask, he just wrote to me. He said, Master Pham, I'm seriously thinking about retiring in 3 years' time if I am continue to be consistent in making profit by year end. Very big thank you to your teaching on option trading. I was able to use very little capital with control risk to achieve my goals. And Adam teaching in trading and technical analysis really helped me identify the best entry and exit for a quick profit, regardless uptrend or downtrend. He said probably will hit $1 million by next year if this continue. Okay. And he said the combination of option trading with pham, with price action manipulation by Austen strategy is actually very helpful. So I tell you, if you know option and you know technical part to complement it, it will be very powerful, right? This Dr. Chan, again, I'm talking about Dr. Chan, he's a medical doctor. Master Bang, I want to thank you from the bottom of my heart for your super teaching and guidance in my options trading journey. I've been using your proprietary strategies like Boon Bang Collar, Snipex, Boon Con spread, and hedging with bear put spread portfolio, year to date 40% up. It's of course modest compared versus other students, but I'm happy overall. Iron Shell, Iron Striker, and OTP are the best investments I have made to educate myself on the art to take on Wall Street. Thank you again. God bless. And he made quite good money there. Pham, sharing year-to-date result. Would like to express gratitude to Adam Bang, sharing valuable knowledge to courses. Also, your timely advice, guidance on Telegram chat group. You really went above and beyond in helping students. I'm very thankful to be part of the community. Have learned a lot from our fellow members. Found the combination knowledge from UIP, which is Adam Investor, Ultimate Investor Playbook, and option courses really helped to boost my return. Right, so she made like 82% here. Dr. Chan also wrote to us recently, I think, and in April or May. So far, 2000, and I think in May. So far, 2023 has been much better year to date. My portfolio achieved 82% from taking long expiry call options. Of this one beating the underlying Nasdaq, which is about 20% year to date. Thank you, Adam Bang Austen. Okay. Again, this one I mentioned in on Sunday, just very briefly on 2 levels. Level 1, we have 11 lessons, right? 22 hours of videos. We cover on the basic. If you know nothing about option, no worry. We cover all for you. Okay. So this is the one on the level 1. You learn on the basic strategy, the foundational part of the options, and also on pretty much on buying part of the strategies. Option level 2 is advanced one. Obviously, this is a higher level, includes 15% strategies, including my proprietary one and the crouching bull, where I teach in details, a lot of example, rolling, entering, exiting, and all those things. You can find all those videos. And we keep adding new lessons and knowledge and strategies. I'm testing a few more, and you will see it in the future. I mean, this is the best way for you to learn. And we have the community to support you as well. Again, we cover on kinds of strategies, right? And then Snipex, my own proprietary, which is doing very well as well this year. Sniper spread for you to play earning. Moon Put Extreme by Adam. Snipex 4B for new beginner. So let me skip through on those testimonial. Continue. I had collar. I had Boomang collar. I had how to repair the trade that went bad, right? Option assignment, should you be happy or you should be worried, right? Rolling option, a lot of people ask questions on rolling options. I have many videos on this one to illustrate different scenarios, right? Crouching bull, my latest and greatest proven profitable strategy that I am very happy with, and hopefully you'll be benefiting from it as well. Again, 70% off, right? take this opportunity, take massive action. I tell you, this is the still. I mean, I don't know how long we can have this kind of deal for you. Again, you get two bonuses. Bonus one, you have on trademark scanners and tools. And bonus two, for me, this is a very valuable part. And right now, this time, you still can have the lifetime access to the Discord discussion group. In the future, it could be a subscription that you need to pay every year. But right now, if you do it, I think it could be the last chance you still have it lifetime. All right. I really urge you to think about this one. This is a way for you to learn the life skill and also make money along the way. Yeah. James also wrote here, and then he shared 30% year to date. This is from Mike. Mike made like 37% year to date. Also end of May, so have not updated with June. June should be a good year, a good month as well. So people, when Australian wrote in, they're making good money in this year, beating the market for sure. Mike also. So lots of sharing by the community, lots of flowers and colors there. So here what you got, right? You got option level 1, trading level 1, iron shell, level 2, bonus 1, bonus 2, and that on adds up to about $8,000. Unpromotional price $6,000, but today you got 70% off. Man, that is only 1,822.8. Okay, so grab this opportunity and learn the life skill and also earn the money along the way. And if you sign up in the next 15 minutes or so, there will be a fast action bonus for those who sign up early, right? Where you get the 3 hours booster or jumpstart workshop with one of our most experienced coaches, YY, who have been very profitable as well. So he will guide you through how to jumpstart your option trading journey, right? Again, just to remind you, you got 2 levels, you have 2 bonuses, now you have fast action bonus on together. And it's on like for only 1,822.8, right? So grab this opportunity, and then I will look into the questions you send in and also the trade ideas that you send in. It's 11:30. I told my OTP members that I will come back to them at 12. So we have 30 minutes, right, to get through on the rest, which is on the Q&A and the other trade ideas you may have. All right. So let me go to the Google Doc first to see what question has been pushed to me here. And then I will look into the Q&A chat, right? So let me open the document. There you go. And while I'm looking into it, please, take the screenshot, the QR code there to get on the detail. Okay, so here's the Google Doc. I have it. All right, so first question from Metsi Tesok. The trade ideas is Tesla, NVIDIA, Microsoft, and Meta. Okay, so on high-flying stock, right? Let's go to the chart for those and then see any of them are valid. All right. First question is Tesla. Okay. Now, obviously, Tesla technically is very strong. It's a little bit too overstretched, in my opinion. It's like almost 90 degrees. But the one that concerns me is the valuation, because my valuation for Tesla stock is like about $150. Yeah. Right now it's like double that. Okay. So Tesla is overvalued by 100%. So I don't want to enter the trade. Tesla could be a very good stock, a good company, good products, but it doesn't meet the second criteria, which is to trade below intrinsic value. So right now the stock price is way overvalued based on my valuation. So I won't enter crouching bull for Tesla. Because if I sell a casket put and the stock price collapse to, it drops to valuation, the trade could be losing a lot of money. All right. So good stock, good product, but not good from the fundamental, from the valuation standpoint. Next one, NVIDIA. I think NVIDIA is the same thing. Very good products, lots of, the leading player in terms of AI. When you talk AI, NVIDIA probably goes first, right? But valuation standpoint, it's way overvalued. Yeah. My valuation for NVIDIA is about 200. It's now more than 100% overvalued already. All right. So for that reason, I will not enter the trade on NVIDIA for using crouching bull. You can use other lower risk trade for NVIDIA. For example, you can enter a moon put spread, which the max loss is well defined. Remember, crouching bull, you don't have protection on the downside. If the stock price drops like $100, you could lose $10,000, right? Be careful on that. So I would not do this NVIDIA purely based on overvaluation reason, okay? Microsoft, I think Microsoft is a good stock, and valuation is just, I think, at the, it's above intrinsic value as well. It's also overvalued right now. Over the past few days, it's already run up above intrinsic value. Yeah. So, and it's overbought, right? It's near overbought. It's already run up so much towards the earning. So earning has to be fantastic. Otherwise, there could be sell on news, right? People take profit if the earning is not good enough. Overvalue, good stock, good product. The company that I love also beyond Google, but it's overvalued. Finally, Meta. Meta just get overvalued a little bit. Yeah. So again, I would prioritize the stocks that are still below intrinsic value. Yeah. Those stocks that you suggested here has been up too much and way overvalued. And this one, maybe I call it at the fair value. But then that's not the attractive candidate for me to enter, right? I only enter when the stock price still below intrinsic value. No, you can ask me, so what to do with the trade I have right now. Okay? I can get into that later because the stock price has gone beyond the short call. So if it drop, the trade will not be hurt so much. It's not different thing. I can come back and explain to you. But for new trade, I would not enter it. Christine Shipersky suggestion idea for CBS. ASML. Today it's retracing $29, 4%, which is quite nice. Because of earning. See, these are the good stocks, and the earnings seems to be good as well. You see the actual earning 5.53 versus the expectation of $4.97. So it beat the earning expectation, but I think the guidance must be not so good. That's why it's dropping, right? Now, here's my rule. When the stock price drops significantly after the earnings, I have 3 days rule. Within 3 days since the earnings release and the stock price like launching, I would not touch it. This is my rule. Based on my experience and my observation. Normally, when the stock price drop big after the earning, most of the time, based on my observation, most of the time, the stock price won't recover immediately. It won't. Most of the time. It usually takes about 3 days or more for the stock price to stabilize. The seller already get out, everyone like take profit, especially in this case right now quite a bit. They take profit, and then the stock price will build some base, consolidating, and then that could be a good time to enter. Right now, the stock just released earning, right? Today, before the market opens today, and the stock price dropping quite substantially, right? I will not touch it within 3 days rule. Okay. BlackRock has released the earning. Yeah, good. Earning actually beat the expectation. Intrinsic value, I know what intrinsic value for BlackRock. I need to check in this one, BlackRock. Still below intrinsic value. Yeah, intrinsic value for BlackRock is 874. So current stock price is below intrinsic value. Let me write that one on the other one. Also 874. 874. 874. Stock intrinsic value. All right, so stock intrinsic value, right now the stock price is below that, about $130 below that. So is that a good stock to own? Yes, I would say so. Is that trading below intrinsic value? Yes. Technically, is that uptrend? I would say yes. Not the very ideal entry point because the stock price is overbought right now, right? It's overbought. But yeah, but if you let me see if I can have the good margin of safety if I enter the new trade here, right? This is a big bull, huh? So I say, I don't know if this account has enough buying power to shoot this big bull. $750 stock require big buying power, right? So, but anyway, I just closed 2 trades, right? I release some buying power. Hopefully I have enough to take this trade if I'm keen. So now I have $36,000 because I closed SPGI and I closed Amazon trade. This Amazon trade is still pending. Because Amazon went up to $2.50. So I need to raise this one to 855. Right, just wait there. Now let me check BlackRock. BlackRock earnings is out, done. If I use the same DTE, I will buy at the money, 740 at the money, and I sell $100 above that, so that will be 840. 840, that's one standard deviation. And then I sell one month DTE and one standard deviation below. 34, this is 744, so 710. So that will be a trade. So 710 put strike will be my downside protection. So that will be about here. Let's see. How much do they block me for this trade? They block me $15,000. See, for big bull, right? You need many bullets. You need a lot of ammunition, big bazooka kind of thing. So maybe this one I will use my bigger account, the IB, to trade, because I don't want to have this trade in here and it take up like half of my buying power, right? So I may think about this one, right? First of all, because it's overbought. So I am not keen. I prefer it to be retraced, and then there's a better entry point. Number 2, it takes so much buying power from this account, so I need to reconsider if I have time. So not so keen right now. But Melly, another big bull. Melly is a big bull. Melly, one contract is like 1,002. So this account cannot afford to take that big bull, right? And earning, how about earning? Earnings coming. And the thing, is that below intrinsic value? Yes, below intrinsic value. Good stock below intrinsic value. But technically, it's not a bullish setup. I tell you, there are two signs of concern for me. Number one, it very overbought right now, so it's due for retracement because it's a very strong run up over the past few days. Number two, this pin bar is actually is the bearish pin bar if it goes this way. It push up and then down. Remember yesterday Elson talked about some bearish pin bar pattern, right? I don't know if this is called something. Not the ice cream, the opposite of the ice cream. That's one. That's bearish, right? So I'm very concerned on the technical part. So I'm not taking this one. And it's also maybe, I don't know, it may not break above the 150 moving average. Again, if you want to enter this trade, you need a big account. Yeah, just show you how much it will block. So it's just enter at the money 1 to 20, for example, 1 to 20, sell 1 for 70, 1 for 70, 1 for 80, and then you sell one standard deviation below that, 157, that will be 1050. 1050. Yeah. So one contract, it blocks you $20,000, right? It takes up like 2/3 of buying power here. So I cannot afford to do one big trade in this account. But again, this trade itself, I don't like it because the technical setup. Starbucks, yes, I think I have Starbucks here. But if you keen, I can enter it as well. Is it? I have Starbucks. Yeah, I do have Starbucks. I have two contracts here actually. So if you are keen, I show you how to do it. But I like Starbucks because I am the customer, right? My family is using it. I don't know what is that. I think my valuation is like $110 something. I forget the other one. Let me go to the other one. Starbucks. What is the valuation? 119. Let me put it here. 119 is a valuation, right? Stock intrinsic value, 119. So right now it is below intrinsic value. So it's good. This is the company where I use its products almost every week, right? And my family also using it. This is below intrinsic value for sure. Good company. Technically, I like this technical setup. Actually, you see here, it has been hanging above the 200 moving average. 200 moving average seems to be like underpinning the price. And right now, the stock price is above that. Earnings coming is fine. It's no longer overbought. So if you are keen, you want to enter, this is the one you can enter. I have two contracts already, but if you want, this is a trade. Go to the trade, let's say January. See, I have two contracts here. You can use the same contract, the trade that I have here. Buy one and then sell one standard even 15%. So 115. In this case, you sell 115 because you get better premium, right? $15 above the current stock price. So 115 instead of 120 like my trade here. And then you sell 30 days expiration, $7 below that. So that 94, you can 95. So this is a trade. Yeah, not bad. Starbucks is not it's a good trade. Yeah, but I have already two contracts there. I don't want to enter the new one anymore. And Troll. Now I used to trade CBS on T price row. But I tell you one thing. I mean, the trade that I enter, I think I exited it at a small profit. But I don't like this for one reason. I've been in the trade, so I know the issue of this. The premium when you sell the premium on the cash secure put, like it's very low. For when you sell cross the earning like this, the earning is still okay, the premium still okay. But outside the earning period, the premium you get very little. And the liquidity is not great. You see, bid and ask is not so granular, not so tight. So not good liquidity, rolling becomes so difficult, and then low premium on the put, cash secure put. But it's a good stock. I think it's still below intrinsic value. Yeah, I don't have the show valuation here. I think I have it in here. It's below intrinsic value. Yeah, intrinsic value is 157. It's still below, but premium is not good. I traded, so I know, right? Right. So quite a lot of suggestion here. Let me go to some questions. From Kate Y, can we do one strategy on earnings tonight? No, sorry, I cannot, because many folks in the audience today do not know the earning. So this on Phil, I believe it's Amazon. Yeah, Amazon trade has been filled here. Yeah, correct. So get in already. So Kate, I'm sorry, but I won't do the earnings today. I don't want to distract the audience. I focus on the strategy that I have talked about. I don't want to introduce a brand new strategy here, so that it will take up on the time. All right. Another question: do you refrain from trading within a certain number of days prior to the quarterly result announcement? Depends. Some strategies I would definitely avoid the earning period. Vertical spread is one of them. There are 4 vertical spread strategy: bull call, bear put, bear call, and bull put. Those 4, I don't trade with the expiration crossing the earnings, because the gap up and gap down in the earning could cause a big impact to the trade. I do not do it with Moonbang as well, but there's some trade that I don't mind entering during that period. Diagonal spread, crouching bull, I don't mind, right? So, and then there are strategies that are designed specifically to trade earnings. So depends on what strategies we are talking. Can ye go as CRS? I believe you mean CBS. As CBS strategy involves multiple contracts of sell put, which your cash and sweep may not be enough to cover. Correct. I mean, for example, if I do the trade on Melee and another trade on BlackRock, then I won't be able to do it because it already maxed out the capacity, right? May not. Okay, so cat and sweep may not be enough to cover if exercised. Correct. What percentage of option buying power versus net liquid valuation you maintain in case of margin due to sharp market correction? As you see here, normally I keep about 20 to 25% buying power in my account. Just leave it there, just in case the market fluctuation and then it affect the buying power. I don't max out. In other big accounts, I also leave like $100,000 buying power left, or $150,000 left. So roughly about 20-25%. I leave it there. I don't max out in case the market have a big sell. Another anonymous attendee, Mr. Bang, for this CBS, we must be prepared to buy shares if it goes below 115, which I think you mean the 115 is a Google trade. Yeah. If so, is there another strategy that we don't have to buy shares? I've signed up for the cost, by the way. In fact, I have quite a few times when the short put was assigned early, but it's not an issue. I just sell the assigned share and I sell the new put to reinstate the CBS. In that case, I just delay taking shares, and I can delay taking share forever. I can do it forever. So technically, I do not have any shares in my portfolio. It's on options. In In the lesson, we say you need to have cash to be ready to take 100 shares. In reality, I do not. I do not take shares. I just keep delaying it. I keep rolling the put so that I don't have to tie up a lot of capital buying shares. Yeah, you don't have to. You don't have to buy shares. Jerome Silva, you say, may I know why you are not doing this CBS on indexes like SPY, DIA, QQQ? Oh, I do. I do. In fact, I need to show you that because I need to take profit on one of the trade there also. I closed a QQQ trade, I think 2 weeks ago, in this account for a very nice profit. I think I make about $7,000. Now I still have another SPY. I do the same thing, SPY on Crouching Moon. This one also making close to $8,000, almost 100% return on investment. This one I highlighting green here because I want to take action today, which is to close the trade. Why? Number one, you see the SPY price has exceeded the short call, right? It caps the upside. Though it still has some net intrinsic value here to squeeze, but not much. Number two, this moon call has only less than 2 months to expiration, right? So I normally don't leave it like too short. I close it early. And number three, SPX already overextended, right? SPY overextended, right? It's oversold. It's oversold also, right? So there's so many reasons that makes me think that I need to take profit. Number one, profit is very good. Return on investment, almost 100%. Number two, price has gone beyond the short call and not much intrinsic value left to earn. Number three, the remaining DT is running short, right? And then, and I want to, if I like the trade, I can re-enter it. But the key reason for me to close the trade is two. The trade already achieved my profit target and the price is overstretched. Okay, it's overstretched. Because you asked me, now I need to close this trade. Okay, so let me show you how to close the trade. This one, I leave it there, whether it's closed today or tomorrow, I don't care. So go back here. This one I'm long, right? So I sell to close. And this leg, I am short and hold the control key and I buy to close. Okay. Now I go back to the one that I sell put. This one almost expired woodless now, almost woodless. So I hold the control key and buy to close. All right. So if I close now, I will collect like $5,000 plus, right? Let me bargain to, let's say, 10, yeah, higher credit. I want to collect higher credit. Leave it there. I can go back and bargain later. It's nearby, near the mark price. Good, because you asked. Okay, so I do have this on SPY and QQQ stuff like that. Keha Lucas, hi Bang. And by the way, it crossed midnight. I need to go fast. If all your CSP trade are assigned, you have enough cash to buy that good stuff, do you manage? So that's why I say, first of all, I do have cash sitting on my fixed deposit earning 5%. So that's one. Number two, I can always delay taking shares by rolling. I just sell the assigned share, sell new put, delay taking share. I can do it forever. Yeah. It's another idea on the trade breakout consolidation on DIA. Yeah, DIA said the new it breakout yesterday. I haven't checked it today, but it's a good trade and you can enter that, right? Last question I have here, and then I wrap it up. Bang, I have learning and trying to trade option about 8 months now, but I have not been making consistent profits. Trading in the same account with IBKR, stocks are making good money, but I don't see any serious money made in options. Okay. First question, do I need to separate option trading with stocks? No, I don't think so. You don't need to do so. I know that Adam, he trades stocks and and invest and trade options on the same account. Yeah, you don't have to separate. Second, I have only been depositing my account to buy shares. For options specifically, I have not funded. Okay, so you have not funded for options. Okay, I have negative cash. What I'm doing wrong? So you have negative cash. That means you are borrowing. You using margin for investing in your shares. Yeah, but when you trade option, it's on cash. You need a margin account, but trading option, you have to use cash. Yeah. So you only borrow when you are assigned shares and your margin cannot absorb, and the broker will lend you, and then you have to pay interest rate cost, right? But when you just buy and sell premium, it's on cash. Yeah. I see so many students making profits, and I want to learn too, please. Okay, so and this is an anonymous attendee, so I don't know who, but this here's my advice to you, right? It's okay. I mean, and it's normal when you just started and you don't make money on options. That's fine. That's fine. In my first 7 years, I told you. I mean, on Sunday, I told audience, right? I did not make money in the first 7 years trading option. I just went circle because I did not have a proper learning. I did not learn option in the right way. So I traded wrong way, and then I lost money. I hit some jackpot here and there, but then on the losses after that wipe out on the profits. It's okay. It takes time to learn option and absorb it and get it sink into your mind. It takes time for you to learn the skill. This is not an easy skill, but I tell you, if you love it, if you have passion, you do your best. You do your best, and you have a strong commitment. One day you will be able to master it. I mean, it takes me quite a while to master the option skill, and I don't expect you to know it overnight or even the first few months. Right? It could take few years to master on those things. So be patient, and then practice. We have the community to hold hand new members. So a lot of senior members in the community can offer their advice and supports, and then that will hopefully cut short your learning curve. All right. So don't give up, please. Okay. It's quite normal, and you see that community is the way to help fast to learn fast. Okay, to learn so fast. So look at my account again. Now market, I think market has retraced a little bit. Oh no, it's still okay, doing fine. $20 up. My account's profit is now 615. It's fine. I think because some of the tech stock like Google has reduced. Yeah. So Google is dropping like $1 plus. Yeah. Earlier it was up, right? When we entered the trade, it was up, right? Now it drops $1. And then that could explain why my overall profit has dropped, because I have a big position on Google. I mentioned that, right? And then Meta's very strong today. Amazon still strong. All right. Having said that, right? I think it's 12 10 here. I was thinking to show you how to roll in the IB. Maybe I do one rolling in this account. So because a lot of people ask me how to roll. Now $17,000. It's fine. Now let me look at my position here to see which one I could roll. Starbucks is the one I could roll. Yeah, Starbucks is a good one. Okay, let's use Starbucks, because Starbucks I have the trade here with 2 contracts. Yeah, it's 2 contracts here, and the short put is going to expire in the next 2 days, and the short put exchange value is almost depleted, right? Only few cents left, 3 or 4 cents left. So I can wait until Friday when it goes to 1 cent and roll. That's fine. But I can roll it early because there's not much left to wait. So here how to roll, huh? Right? So this is the short option. So I need to click to buy to close. I buy to close 2 contracts, huh? I change the contract later, buy to close. And then I will sell the new one. The new one will be expiring in a month. One standard deviation below the current stop price. So 101 minus 7, what do we have? 94, right? I don't have 94. I sell 95. It's okay. Hold the control key, sell 95. So this is the rolling order. I buy to close the current existing put option expiring in 2 days because it has only few cents left. At the same time, I will sell to open the new put, cash secure put. Then, you know, the CBS will have 3 legs still. The bull call still the own 2 legs, but the cash secure put, after this, it will have the new leg. Because the own leg, I'm closing it right now. Now, what do you think here? Why it makes sense to do this? I will roll the current put strike to a lower strike. So what does it mean? It means I have more margin of safety on the downside, right? If the subprice drops in the own trade, if it drops below 97.5, my loss could be accelerating. But now I have further downside protection. It needs to drop below 95 for the loss to accelerate. All right. So roll it down and out a month, right? Down and out. That's what I call down and out. And the best thing here is when you roll it, you get additional credit, meaning you get extra premium. So this extra premium will be used to reduce the cost of the trade. So you lower the cost of the trade. So what happened here is if you do this, right, the worst case in the past, in the own trade, the worst case is you own the share at 97.5 cost plus whatever credit or debit of the trade. And now with the new trade, you would earn potentially the share, we would own the share at 95, which is lower, minus the additional credit. So your cost of owning shares is lower. Yeah. So that's the best thing. So this is the rolling order. Now rolling, you can bargain as well. The credit, you want to collect more credit, right? So you bargain it to like 120 credit. And remember, I have 2 contracts, so I need to change it to 2. Send, out. Yeah. Now it is queuing here. Yeah. So now you notice that before this trade is filled, the order is filled. Notice this one. My current CBS trade on Starbucks is losing a little money. This is P&L since I opened. So call it like $20 loss. Yeah, today is good. Today is up by 44. But overall, the trade is still losing a little money. Now, if you break out the trade, you have the moon call, and then you have the short put, the cash secure put. The cash secure put generated $137 profit. But the moon call is the one that lost money. Yeah. So moon call lost how much money here? 281 minus 119. So the moon call is losing. The moon call is losing 165, 162. This is a loss of the moon call. And the cash secure put makes 139. In total, you lose 23. Yeah. So said differently, on the profit of the trade comes from the cash secure put, basically. Because since I entered the trade, the price actually went down. So the moon call lost money, the cash secure put makes money to offset. Now, the moment I roll this one, the profit from the moon, the cash secure put will be gone, will be removed from the platform. So suddenly you will see the loss of the trade to jump up because it no longer has $139 profit. You will see the loss will increase after I roll. It's because the platform removed the profit on all the data from the own cash secure put. So when you see the loss jump after I roll, don't freak out, right? It's not the real loss. To calculate the real P&L, you need to consider how much the realized profit from the classical put that they have removed. Normally, I track it manually. In the platform here, I track this rolling P&L of the put here in this one. So the P&L of the trade will combine with the current P&L plus whatever P&L of the rolling. Yeah. So don't be freaked out when I roll this one. And I do it right now and you can see. Not this one, 24. After I roll this one will become like 160 something. Okay. Because this one will go to 0. All right. So let me bargain it now. This one, let me reduce it to 118. See if it feel. Not yet. Right. One more at the market price right now. But let me reduce one more step. Slightly below the market price, still not feel. Normally I just leave it there, but now we're running out of time. So let me reduce one more cent. See if it feel. Yeah, so it's now filled. So you can see here what happened. The trade loss is now, as I mentioned, jumped to 163. Because the profit from the old Casacule put, the 136, is now gone to 0. The new Casacule put I just sold here has only $1 P&L, so it doesn't matter. So the Mooncorn loss is still there, but the profit from the Casacule put has been removed. That's why you see this one, the loss jump up. But don't be freaking out, because when you track it, you need to track how much profit from the Casacule put that they have removed from the platform. That will be the real P&L of the trade. Okay. So now hopefully you have seen me doing the rolling, rolling of the trade and how to record and everything. Let's see what else I need to cover here before we call it a day. All right. So I have other candidates, but I don't think, you sent me enough candidates there. I was thinking to do maybe one of the 2 or maybe 2 of the 3 here. Those could be a good candidates for you to consider. This is my moon bang. I took that photo in New York. And again, take massive action. And then I hope to see many of you in the community. I leave this screen here. And then one thing, tomorrow there will be an event. Okay, so I just let you know, tomorrow at 10 p.m. Sorry, at 7:30 p.m. tomorrow. 7:30 p.m. tomorrow, Thursday, 7 p.m. Singapore time, so maybe 7:30 a.m. in the Eastern time in New York. 7:30 p.m. Singapore time tomorrow, Thursday, July 20th, will be special topic from Jeffrey Ong. Okay, he's an expert in property, so he will talk about 10 properties in 10 years. How to build cash flow from UK real estate. Okay, this guy is making millions of dollars in investing in UK property. And if you are in this passion, it's a must. Yeah, it's a very good, presentation from the expert in the industry here. So 7:30 tomorrow, and I hope many of you will be able to join Jeff's webinar tomorrow as well. And let's call it a day. I come back to my OTP community now, and I see many of you in the community. All right, take care. Bye, everyone.